All right, hello everybody. Hope you had a nice weekend. And just going to take a look through the market here, specifically, or especially with SPY. Um, excuse me. Wow, my wife says I have allergies. But anyway, before we get into SPY, there's two things I want to kind of bring up here, which I think are probably pretty important. The first is this action in NVDA. All right, action is a term that traders use for sometimes for things that are really not quantifiable. And like an example of this is if a company reports good earnings, but the stock goes down, that's bad action. That tells us that despite the good earnings, there's still more investors that want to sell than who want to buy, or at least there's more shares for sale than there is to be bought. So the seller's got to knock the prices down. The media really focuses a lot on the news, and sometimes the news is important. Most of the time, it's not. But we have to remember the price of a stock is determined by supply and demand. So if something doesn't change that supply and demand picture, the stock's not going to move. If you can understand economics 101, you can understand chart reading it. But unfortunately, a lot of these quote unquote experts really don't know their ass from their elbow, as my friend would say, and they give it a bad reputation. But anyway, come check out Stock Market Jobber, subscribe to our site. I've been around the block a few times, and I like to think I know what I'm talking about. All right, but anyway, let's take a look at NVIDIA. This is a really classic example of what we would call a buy the rumor, sell the news, or a situation where we have what we would call a crowded trade. What's a crowded trade? All right, think about this. All we hear about in the media is blah, 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 AI this, AI that, NVIDIA is up so much this year, blah, blah, blah. AI is going to change the world. So you get this vast majority of investors who want to buy NVIDIA. And this is where the earnings came out overnight. So on this particular day here, on Wednesday, it closed here. And the following day, it opened way up here. So if you looked at this in the morning, you'd have said, wow, this thing is going to have a great day. The earnings were great. But if there's no one left to buy, the stock can't go any higher because it's buyers who push the price higher. So if everyone and their Aunt Mary, everyone who wanted to buy NVIDIA takes a position, well, guess what? That's it. That's the end of the food chain. It can't go higher if there's no one who's buying it. So the market runs out of buyers and we get this big move lower. And then on Friday, we had some follow through on the way down. So this is some really bad action. And this is obviously the hot stock that people are focused on. It's a big part of our tech sector. I just think that this negative action here is bearish for the broader market. All right. The next thing we got to pay attention to is interest rates, because right now interest rates are becoming a real issue. And this is the 10-year yield. And we can see we're at 424, 4.24. But, it's pretty high, man. If you go back here, it's the highest that we've been at since way back here, June of 08. So interest rates are high. We're getting this narrative out of the government or whatever. It's like, oh, inflation's coming down. Inflation's coming down. Inflation is still there. It's important to understand that it's just not going up as fast as it was, but it is still going up. All right. Now we got this more of this, forgive student loans and give these people free money, give these people free money. This is all inflationary stuff. And remember, we had Powell talk about on Friday saying that what to me is pretty self-evident that the Fed's probably going to have to keep raising rates. So bad action in one of the biggest stocks, inflation pressure, government says they're going to keep raising rates. These are all negative things for the market. All right, now let's just go over here to SPY real quick. And SPY is an ETF that tracks the S&P 500. The S&P 500 consists of 11 different sectors. And I think by looking at the sectors, well, actually, I know by looking at the sectors, we can get insight into what the broader market is going to do, meaning SPY. So you have the S&P 500 is on the top, and then you have the next level down is the 11 sectors. Then within the sectors, we have industries. So if you want to get an idea of what's going to happen with the S&P, we can study the sectors. If you want to get an idea of what's going to happen with the sectors, we can look at the industries, and we can work our way all the way down. Anyway, let's just take a look here. Notice where we ran into resistance right around this particular level, which was resistance back here. Certain things like certain levels, one of the most important things to understand in markets is that some price levels are more important than others. Look at this here. This black line is 431. The low trade here was 433. So 2 points on a $430 security. Support back here in June. How come it was support? Well, back here in last August, it was resistance. Resistance can convert into support. It happens all the time. It's one of the important things to look for on charts is how to identify important price levels. If you see something that was resistance before and the price gets above it, there's a lot of people who sold back here who come to regret their decisions, and they say to themselves, man, I made a mistake. I'm going to buy my shares back if I can get them at the same price I sold them at. So if you have enough remorseful sellers placing buy orders, the level that was the level that was resistance convert into support. Now, a lot of times when we get to support, we get these moves higher. We bounce off of support. How does this happen? You can see it happened over here too. Bounced off of support. I mean, it might look like it didn't get to support, but come on, man. We're talking about 2 points on a $430 security, right? Just think about the percentages. But we have investors who want to buy, and when a market's moving lower, it's because there's not enough buyers or demand to absorb all the supply. So what happens? The sellers are forced to offer their shares out at a discount, and this forces a downtrend. Some of the investors who want to buy start to notice, wow, look at that, man. The price isn't going any lower. That must mean there are buyers coming into the market. I want to buy. I better go out there and raise the price I'm willing to pay because the sellers are going to go to whoever is willing to pay the highest price. So I was at 431. I'm going to go to 432. Someone sees that and they go to 433 and so forth and so on. And we get a bounce. So markets bounce off of support because of anxious buyers outbidding each other. The opposite is true at resistance. This was resistance back here. When we get to resistance, people who want to sell, all of a sudden they notice, wow, the market's not going any higher. And I know that markets go higher because there's not enough supply or sell orders to fill all of the demand. Did I just say that backwards? No. Yeah. Okay. So markets go higher because there's not enough supply to fill all the demand. When some of these investors notice, wow, the price isn't moving any higher, therefore there must be new sellers coming in. I better reduce the price I want to sell at because the buyers are going to go to whoever is willing to sell at the lowest price. So if you look at any chart, you can see we got these important price levels. This ran into resistance right around here, right around 444, 443, and we came lower. Found support at the level that was important before. But like I said, I think we're going to go lower. If we get back down to 431, maybe there's a tradable balance, but seems to me like that would just be kind of temporary and we would eventually keep going lower because of things I just mentioned. Oh, what I forgot to mention too is basically the Chinese economy is pretty much in free fall. Here is a really good chart that illustrates the importance of price levels. This is our technology sector, which is probably in the driver's seat right now. Notice how what was resistance became resistance here. Why would a price level that was resistance 18 months ago become resistance again? Well, you got people who bought up here who are like, damn, when the market went lower, and they're like, I'm going to sell if I can get out at break even. They wait, gets back up to their level. And if you have enough remorseful buyers placing sell orders at the level that was resistance, it can be resistance again. This is why markets run into resistance at former peaks. It's because of psychology. It's not because of the debt ceiling or the budget or whatever the hell it is they're talking about. It's because of psychology. When you look at a chart, you have to look at it through the prism of this is mass psychology. What does it tell me about psychology? Here you have support becomes resistance. This is also because of buyer's remorse. Why would this level be important? I don't know. For some reason, the market likes this level. We get to support, we bounce, like I mentioned before. We get to resistance, we sell off. But there are people who bought here who regret doing so when the price goes lower. And they tell themselves, if it gets back to my level, I'm out. I'm going to sell and get out of break even. Some of the people listening to me right now probably know this feeling. So buyer's remorse turns support into resistance. Buyer's remorse turns support into resistance. These are important price levels. In the institutional trading world, where I spent pretty much half my life, if not more. I know what institutional traders look at and what the traders who run the big hedge funds look at, because guess what? In a former life, I was one. Now let's check this out. Look at this as we're going higher. Actually, before I go on, remember, buyer's remorse is a characteristic of a market that's going lower. It just makes sense, right? People buy, the market goes lower. Now, when a market's going higher, seller's remorse is common. And what is that? Well, people sell, but then the price goes higher and they tell themselves, man, I made a mistake. If the price gets back to the level I sold at, I'm going to buy my shares back. If you have enough remorseful sellers placing buy orders at the level that was resistance, resistance converts into support. Resistance converts into support. Resistance converts into support. Resistance converts into support. Resistance becomes support. And then when this resistance stopped becoming support, this is a characteristic of a market top. So as markets go in kind of staircases, right? And in an up market, you get these trading ranges, and what was the resistance in one range becomes support in the next range. Like we can see here, it's like a staircase. But when this phenomena stops happening, when resistance stops becoming support, or the support that was at resistance breaks, this is a characteristic of a market top. And that's what we saw. And I think this is a really good chart to look at to kind of understand that. And before I go, I just want to mention too, seller's remorse can also keep support intact, because there are people who sold here who regret doing so when the price goes higher, and they say, man, I'm going to buy my shares back if it gets back to the price I sold them at. So you got remorseful sellers here buying their shares back here. Okay, everybody, thank you so much. These are what I'm going to be looking at tonight. I mean, tomorrow or this week, amongst other things. It is a short week. Well, it's not technically a short week, but it is the last kind of unofficial week of the summer, and it's Labor Day next weekend. So this week could be kind of on the quiet side. But as we get into September, I expect things to kind of really pick up. Okay, everybody, thank you so much. I will talk to you soon.